Hello everyone and welcome to today's webinar, which is Pensions the Quiz. So today we've got a bit of fun in store to test your knowledge on everything pension related that we've talked about in the session so far for the badge series. So you also need to attend this quiz as well as 5 other sessions in the series to earn your badge, but more on that a bit later. So my name's Alice, and as you can see, I'm joined by Duncan too. We're both going to be presenting the session today and delivering a few rounds each. And yeah, Duncan will be back for round 2 of the quiz. So round number 1 of today's quiz, this is all about pension schemes and salary sacrifice schemes, focusing on the content from our Pensions the Basics session and the salary sacrifice pensions 1-2. So let me just launch question 1. We'll dive straight in. So question number 1 for round 1 is, where in Sage 50 Payroll do you set up a pension scheme? Is it in the company settings, company pension schemes? Is it in Payroll import pension updates? Or is it in Payroll send pension data? So where in Sage 50 Payroll do you set up a pension scheme? Fabulous, I'll go ahead and close that one down then, and we'll move straight on to question number 2 of the round. Now this one is a multi-select answer, so which of the following are included in qualifying earnings? Is it salary, commission, bonus, or expenses? So which of the following are included in qualifying earnings? Fab, so question number 3, this is, where can you amend pension contributions for one employee? So where can you amend pension contributions for one employee? Is it in company settings, company pension schemes and edit, or is it in the employee record, pensions and managed schemes? So where would you go to amend pension contributions for an employee? And question number 4 is, how does an employee salary sacrifice pension appear on a pay slip? And again, this is a multi-select, so select all that apply for this one. How does an employee salary sacrifice pension appear on a pay slip? Is it as a standard employee pension contribution? As a negative payment, reducing the gross pay for tax and national insurance? It's included with the employer contribution, or it's not shown on the pay slip at all? So how does an employee salary sacrifice pension appear on a pay slip? Perfect. So those were your questions for round 1. We will go ahead now and find out what the answers are. Now, while we do go through the answers, we do have our first anagram of the quiz for you to figure out too. So as I say, if you figure it out, pop your answer there in the questions panel and we will reveal it at the end of the round. So today's anagram, the first one is Alice's Scary Fair. And the clue is, everyone's a winner. So what could that be? Pop it in the questions panel and we'll go through the answers and then reveal what the anagram is. So first question then, question number 1, let's see what you all thought. That was, where in Sage 50 Payroll do you set up a pension scheme? Overwhelming amount of you said company pension schemes, and you would be absolutely correct. So it is in the company section and it is in pension schemes. That's why you'll set up the scheme in Payroll. You'll tell Payroll what settings it has, what type of scheme it is, and how the contributions are calculated too. So well done. Let me just hide those results. And yes, it was answer B there. So well done to those of you who got that correct. Moving on to question number 2. So this was, which of the following are included in qualifying earnings? Again, this was a multi-select one. So let's just quickly see what you all thought. So quite a good split across this one, but a lot of you thought that it was salary, commission and bonus. And a lot of you would be correct. So it was A, B and C. Of course, general kind of rule with this, most payments that account towards tax and national insurance are included towards qualifying earnings, hence why expenses isn't. So that one is not included in qualifying earnings. Perfect. So question number 3 of the round, this was, where can you amend pension contributions for one employee? Let's see what you all thought. So 99% of you said that that was in the employee record, in the pensions tab, and then manage schemes. And 99% of you would have been correct. So it is in the employee record. Well done. That is where you can amend an employee's pension contribution, and it will stay at whatever you change it to until you change it back again. Perfect. And last question of this round before we pass over to Duncan. So question number 4, how does an employee's salary sacrifice pension appear on a payslip? Again, this was a multi-select one. We'll see what you all thought. Okay, great. So a little bit of a split, but most of you thought that it was as a negative payment or that it's included with the employer contribution. Let's see whether that is correct. And it was, yes, so B and C for that question. Salary sacrifice schemes obviously do show a little bit differently compared to other pension contributions, so don't let that throw you off. They will also show differently in the enter payment screen too. So you'll have the salary sacrifice amount on the payments tab, and then you'll have that combined total of the employer and employee salary sacrifice amount in that employer box of the summary tab too. So massive well done to those of you who got those correct. And lastly, before we do move over to Duncan for round 2, we will go ahead and reveal the anagram. I can see quite a few of you got that right in the chat, but it was Alice's Scary Fair. The clue was everyone's a winner. And it was salary sacrifice. So well done. Of course, salary sacrifice schemes do have some great benefits, including potential savings for tax and national insurance for the employee, and then of course national insurance for the employer as well, just to name a couple of them. But well done, that is round 1, so we will go ahead and pass over to Duncan for round number 2.
Thank you very much, Alice. So round 2 is all about pension calculations. So same format as before, we're going to give you about 45 seconds to answer the polls. And we will start with question number 5, which is on screen now. And that is, how are pension contributions deducted from an employee's pay? So are they deducted before calculation of tax? Is it before calculation of tax and national insurance? Is it after calculation of tax? Or does it depend on the pension scheme? So the question there is, how are pension contributions deducted from an employee's pay? And we will move on to question number 6. So question number 6 is, how does use qualifying earnings for pensionable pay affect pension calculations? So how does using qualifying earnings for pensionable pay affect pension calculations? Is it that the employee contributions are reduced by 20%? Are the pensionable earnings between lower and upper thresholds? Or is the pension contribution calculated from basic pay only? So how does the use qualifying earnings for pensionable pay setting affect pension calculations? Great, and we're going to move on to question number 7. So question 7, if the employee's pension contribution is deducted after tax, the contribution is reduced by what percentage? So if the employee's pension contribution is deducted after tax, the contribution is reduced by what percentage? Is it 4%? Is it reduced by 5%? Is it 20%? Or is it 40%? Great, and that brings us on to our final question of round 2. So question number 8. Where can you check if a payment has been set up as pensionable or qualifying earnings? And this one's multi-select, so select all that apply. Where can you check if a payment is set up as pensionable or qualifying earnings? Can you check that setting from company and pay elements? Is it from company and legislation? Could you check it from enter payments on the summary tab? Could it be checked in reports, company reports, and then the payment types report? So again, select all that apply. Where can you check if a payment is set up as pensionable or qualifying earnings? And that is the last question in round number 2. So before we go through the answers, here's your anagram round for round 2. So the anagram is extra life, and the clue for this one is as arranged with HMRC. So extra life as arranged with HMRC. If you figure that one out, pop it in the Q&A and we'll let you know if you got that at the end of the results. So let's have a look through the questions for round 2. So the first one, question 5, was how are pension contributions deducted from an employee's pay? Let's have a look at what you said. So we've got the majority of you, 85% of you, saying it depends on the pension scheme. So let's have a look if the 85% were correct there. And of course, yes, it is. It's answer D, it depends on the pension scheme. So specifically the tax relief that the pension scheme uses. So it'll be deducted before tax if the tax relief is a net pay arrangement. It's after tax if your scheme uses relief at source arrangement, and the employee salary sacrifice is before tax and NI if you have a salary sacrifice pension. And if you're ever unsure what tax relief your scheme uses, speak to your pension provider who will give you that clarification. Question number 6 then was, how does the use qualifying earnings for pensionable pay setting affect pension calculations? So let's see what you said on this one. So 93% of answers were saying that the pensionable earnings are between lower and upper thresholds. So let's see if you were correct on that one. And you're absolutely right. So if you're using qualifying earnings for pensionable pay, the pensionable earnings are calculated between the lower and upper thresholds, which are set out in legislation. And a quick tip for you, if you ever want to check what those lower and upper thresholds are for each pay frequency, you can find them in your legislation settings in Sage 50 Payroll. So just go to Company and then Legislation, check the Auto Enrollment tab, and there you'll find lower earnings, upper threshold, and also the earnings trigger. So well done if you got that one right. Question 7. If the employee's pension contribution is deducted after tax, that contribution is reduced by what percentage? So this is what you thought. 70% of you thought 20%. We've got 19% of you thinking 5% for that one. So let's take a look at the correct answer. So the correct answer for that one is 20%. Now, if a deduction is made after tax, the 20% reduction is due to the basic rate of tax that will actually be reclaimed by the pension provider direct from HMRC. So if you were to put a 5% contribution rate in, and that is being deducted after tax, that is reduced by 20%, meaning in effect, you will see 4% being deducted from the employee, and that tax relief still goes into the pension pot, but that is then claimed back by the provider from HMRC. So the correct answer there was 20%. Last one for round 2. Where can you check if a payment is set up as pensionable or qualifying earnings? So let's have a look at what you said. This was multi-select again. So where can you check that setting? 88% of you saying company and pay elements. 72% of you think you can check it from reports, and it's the payment types report. 25% of you thinking enter payments. So let's check the correct answers. So 2 correct answers for this one. It's company and pay elements, where you can check an individual payments, pay element settings. And also there's a report where you can check the setting for all payments at the same time. So it's the payment types report that you find from reports and company. So if you've got a scheme that doesn't use qualifying earnings, it's the payments that are flagged as pensionable, so pension main and pension AVC, that is used in the calculation. And for schemes that do use qualifying earnings for pensionable pay, it's payments that are flagged as qualifying earnings that are used in the calculations, but it's just the earnings between that lower and upper threshold. So big well done for anyone that got 4 out of 4 in that round. Before we go back to Alice, let's take a look at the anagram round. So the clue was extra life, or the clue was as arranged with HMRC. The anagram was extra life. I think most of you got this one. So the answer to that one was tax relief. So it's on to round 3 next. It's all about the pensions module, and it's over to you, Alice.
Thank you, Duncan. So next round, this is 4 questions around the pensions module. So these are things that we covered in our sessions. Pensions module gets started, pension assessment, and send pension data to. So let's just go ahead and move on to question number 9. So just launched that there. So question number 9, this is, if you have the pensions module, how should you assign a pension scheme to an employee? So if you have the pensions module, how should you assign a pension scheme to an employee? Is it in their employee record on the pensions tab? Is it by running a pension assessment? Or is it by using a global change? Great, so question number 10, this is, when should you run the pension assessment for the current period? When should you run the pension assessment for the current period? Is it before enter payments? Is it after you update the records? Is it at the end of the month? Or after enter payments, before the pre-update reports? There we go. Perfect. Moving on to question number 11 then. And this question is, what does a flag in the pension assessment indicate? So what does a flag in the pension assessment indicate? Does it indicate that the employees had a change to their worker category or status? The employee needs to increase their pension contribution? Or that the employees opted out and that you need to process this? And last question of this pensions module round, question number 12. And this one is, which pension providers can you send pension data to using the pensions data exchange? And this is a multi-select question, so there is more than one answer for this one. So which pension providers can you send pension data to using the pensions data exchange? Is it Nest, Aviva, the People's Pension, or Smart Pensions? Fab, so those were your 4 questions for round number 3. Let's go ahead and find out what those answers were. So while we do, another anagram for you to figure out as well. Remember, pop your answers in the chat. So this anagram is Big Ellie, and the clue is they've got to be put in. So Big Ellie, and the clue is they've got to be put in. Great, so while you're all figuring out that one then, let's take a look at question number 9. So question number 9 was, if you have the pensions module, how should you assign a pension scheme to an employee? Let's see what you thought for this one. So 39% of you said in the employee record on the pensions tab, and 61% of you said by running a pension assessment. So just double check which of those were correct. And it was B, so it was by running a pension assessment. So those of you using the pensions module, really important to let the assessment assess and assign the scheme to your employees, especially if you do want to use some of the other features with the pensions module, like send pension data and send pension correspondence too. But for those of you doing it manually, so without the pensions module, that's when you would assign the scheme either in the record on the pensions tab or using a global change. So well done to those of you who said answer B. Moving on to question number 10. So this was, when should you run the pension assessment for the current period? See what you thought for this one. So overwhelming majority, so 88% of you said after enter payments but before the pre-update reports. So we'll just go ahead and see if you got that correct. And yes, the correct answer was option D there, so after enter payments before the pre-update reports. So this would mean everyone's payments will be entered, you'll be able to assess their wages correctly. But yeah, also make sure, of course, you've checked your process date before doing so too. The pension assessment should be run each time you process payroll. It is one of your ongoing duties as an employer just to assess your employees each time you pay them. So the pension assessment, of course, makes that nice and easy for you. But well done to those of you who got that correct. So moving on to question number 11. This was, what does a flag in the pension assessment indicate? Let's see what you thought for this one too. Just sharing those results. So 93% of you said that the employees had a change to their worker category or status. That's what it means there. 3% of you have said the employee needs to increase their pension contribution, and 4% have said the employees opted out and that you need to process this. So which of those does the flag indicate? Let's see. Yes, it's option A. So overwhelming amount of you there got that correct. It does mean that the employees had a change to their worker category or status. So that's the second column in the pension assessment screen. If you do see one of those flags as well, remember you can hover over it just to view a bit more information on what the changes are and why. Also in the top right corner of the assessment window, you could also filter your view to only show employees with changes just to make it a little bit easier to kind of check them and see what's changed each period. But yes, well done to everyone who said A. And last question of this round then, question number 12. This was, which pension providers can you send pension data to using the Pensions Data Exchange? So let's see what you thought. Again, multiple answers for this one. Quite a spread for this one though, most popular answers being Nest and the People's Pension. And let's see what you all, see what the correct answer was, sorry. Perfect. So if you said Nest, the People's Pension and Smart Pensions, you would be correct. They are the three compatible providers when you're using Pensions Data Exchange. Don't worry if you are with another provider though, we do have other ways of sending your pension data, including exporting CSV files too. So it is Nest, the People's Pension and Smart Pensions. So well done everyone. That was your 4 questions for round number 3. But before we move on to that 4th and final round with Duncan, we will go ahead and reveal that anagram. So Big Ellie, that was the anagram there, and the clue was that they've got to be put in. I can see quite a few guesses in the questions panel there looking correct. So the answer to this one was eligible. So well done to anyone who got that. Obviously eligible employees are the ones that should be put in or automatically enrolled into your pension scheme. So well done to those of you who guessed eligible. And that is round 3 done. So we will bring Duncan back for our final round of today's quiz.
Thanks again, Alice. So final round, round number 4 is all about pension re-enrollment. So same as before, we're going to ask the 4 questions via the polling feature. The next one coming up on screen is question 13. And that is, how often must employers carry out re-enrollment duties? So how often must employers carry out re-enrollment duties? Is it annually? Is it every 2 years? Is it every 3 years? Or is it only when an employee requests it? So question 14 is, when is your re-enrollment window in relation to your duty start date or previous re-enrollment date? So when is the re-enrollment window in relation to your duty start date or previous re-enrollment date? Is it 3 months before to 3 months after the 3rd anniversary? Is it within 6 weeks after the 3rd anniversary? Or is it within 1 month after the 3rd anniversary? So when is the re-enrollment window in relation to your duty start date or previous re-enrollment date? Great, and moving on to question 15. So question 15, which of the following employees would not need to be re-enrolled? which of the following employees would not need to be re-enrolled? Is it employees earning below the earnings trigger? Is it employees who opted out or left the pension in the 12 months before your re-enrollment date? Is it those currently working their notice period? Or could the answer be all of the above? And now on to our final question of round 4 and of the quiz. So that's on screen now. How long do you have to complete your redeclaration of compliance? So how long do you have to complete your redeclaration? Is it 5 months from the date you choose for re-enrollment? Is it 5 months from the 3rd anniversary if your duty start date or previous re-enrollment date? Or have you got 6 weeks after completing your re-enrollment? So that was round 4 complete. Let's take a look at the answers, but before we do so, this is your final anagram round. So the anagram for this one is certain or deal, and the clue is it's every 3 years. That's certain or deal. It's every 3 years. If you get the answer, pop that in the Q&A, and we'll let you know if you got it at the end. So on to the answers to the questions. So question number 13 was, how often must employers carry out re-enrollment duties? So let's take a look at the answers you gave. Got a great result on this one. 99% of you think that it's every 3 years. I think there was a clue in the anagram we've just shared. 1% every 2 years. So let's have a look if you were right. The answer there is indeed every 3 years. So originally this was called triennial re-enrollment, but they did change that name to cyclical re-enrollment a few years after that. So every 3 years is when you need to put your employees back into the pension scheme if they previously left or opted out. On to question 14, when is your re-enrollment window in relation to your duty start date or previous re-enrollment date? Let's see what you thought for this one. So again, we've got a big majority, 87% of you saying it's 3 months before to 3 months after the 3rd anniversary of the duty start date or previous re-enrollment date. Take a look, see if you were right on that one. And you certainly were. Correct answer there is 3 months before to 3 months after. You can choose a date of your choice within that re-enrollment window. And if you use the pension module, your pension assessment is how you would re-enroll your employees, and that will happen in the same pay reference period as your chosen re-enrollment date. Now, sometimes it can be the case that your re-enrollment date is after the pay date in that tax period, and that would mean that the contributions for employees being re-enrolled wouldn't begin until the following pay date. But you need to assess and re-enroll in the tax period that your re-enrollment date falls into, and you can choose a date within that 6-month window. So well done to those that got that one right. Question 15, bit of a tricky one, this one. Which of the following employees would not need to be re-enrolled? So what did you think on this one? We did have 20% saying employees earning below the earnings trigger. 9% those that opted out or left in the 12 months before re-enrollment. 5% currently working notice period, and 66%, so a good majority, saying all of the above. Let's see which answers were right. So the correct answer was all of the above. So if they're earning below the earnings trigger, they're not eligible, so they wouldn't be auto-enrolled in any case. If they did opt out or leave in the 12 months before the re-enrollment date, so if they've recently come out of the pension, they don't have to be re-enrolled, but they can be. So you've got the choice to exclude them as the employer. And the same goes for employees who are working their notice period. So if someone had previously opted out or left the pension, they're now working their notice period, re-enrollment comes up, they can be excluded as an exception. And if you use the pensions module, you can assign an individual exclusion reason to that employee. So the correct answer is all of the above. But for answers B and C, you can put them back into the scheme if you want to. And the last one, how long have you got to complete your redeclaration of compliance? So I think this one might have caught a few of you out. Let's have a look at the answers that were given. So more of an even split with this one, 39% saying 5 months from the 3rd anniversary of your duty start date or previous re-enrollment date. Didn't have enough characters to fit that in on the answer. 38% saying 6 weeks after completing your re-enrollment, and 24% saying 5 months from your chosen re-enrollment date. Let's take a look at the correct answer there. So the correct answer was actually answer B, 5 months from the 3rd anniversary of your duty start date or previous re-enrollment date. So if you decide that you're going to choose a later re-enrollment date within that 6-month window, if you chose the latest possible date, so 3 months after the anniversary, that would leave you with 2 months to complete your redeclaration of compliance. And that 6-week deadline is the deadline to communicate to your employees that they've been re-enrolled. So the correct answer there to do your redeclaration of compliance is 5 months from the 3rd anniversary date, either of your duty start date or previous re-enrollment. So that was the last question. A big well done to those of you that got all of those right, and anyone that may have got all the questions right in the quiz. But we will finish with our final anagram round. And just checking the Q&A, yeah, we've had plenty of correct answers in there. A few near misses as well. So certain ordeal, the clue is it's every 3 years. The answer for that one was re-declaration. And I'm sure it won't be an ordeal for those of you that have been to our webinars, because you will know all about that process and how to make sure that that runs smoothly. So that pretty much brings us to the end of the quiz, but we're just going to come back to run through some further support and tell you a bit more about the digital badge that you can earn. So this quiz was the mandatory session to earn your Pensions Discovery 2025 webinar badge. To qualify for the badge, you will also need to attend at least 5 of the other sessions that are listed on the slide there. And for most of these, we've still got repeat sessions happening for the rest of June. We will be issuing the badges in early July. So once the final session is over at the end of this month, you will get an email with a link explaining how you can access that badge. And just to give you a bit more information on how the badge works, I'm going to play a quick video for you, and then myself and Alice will be back to wrap things up. So I'll play that video now and we'll speak to you shortly. So that is how you earn your digital badge. Just a reminder, you do need to attend 5 different sessions plus the quiz that you've all been to today, so you can tick that one off. You do need to attend live and register with the same email address to qualify for the badge, and they'll be sent out in the first week of July. In addition to these sessions, myself and Alice are running a series of webinars in July. We've added those to our schedule, so check out what's available and get yourself signed up to any sessions you'd like to join us for at sage.co.uk/webinars. Also, to let you know, further support can be found from our help centre at sage.co.uk/help. You can also access the same content by clicking any help icon in your Sage Payroll software. And if you do need to contact our support team, you head to the help centre first, choose a topic you need help with. There'll always be a get in touch link, which will show you the best way to contact our support team. If you're keen to learn more about any of our Sage software, we do have Sage University available at sageu.com. You can create your free profile from there, find your way to the Sage 50 Payroll learning path. We've got e-learning courses, certification, and a load of bite-sized learning that you can dip in and out of to brush up on your payroll skills. Now, as we are nearly out of time, we're just going to check to see if there's any questions we need to answer in the Q&A. I'd like to thank you all for joining us at the webinar today. I hope you found our pensions badge series enjoyable and you've learned a few things from this. We have uploaded the answers to the quiz if you wanted to download those as a handout. So thanks, Alice, for doing that. And any final questions that you'd like to ask us before we leave, you can pop those in the Q&A. As you leave the webinar today, we will invite you to take our survey. We'd love to know what you've thought of our pension sessions. We do read all of your comments and we hope to use those to improve our webinars moving forward. And we will, of course, send you a follow-up email with a link to the recording of today's quiz. So if you want to take it again or share it with any of your colleagues, feel free to pass that on. With that said, though, we are going to say goodbye. I will just pick up any of the final questions that have come through. Enjoy the rest of your week, and we hope to see you on some of our other webinars in the future. But from myself and Alice, it is goodbye for now.